this week? Well, let me start by first saying that what I think we can do for this meeting would be to set about the first half of it and just talk about how we did last week or what we've done on our strategy and any recap from what we did from the previous week. And then the second part to talk about how to evaluate a market, because that's one of the important things. And so that's kind of the time frame and the content that I think would make the most sense. If there's something that you want to talk about or any other things specific to, I know Doug had a potential deal coming up. We can talk about that too, or any other specific real estate topics. But having said that, okay, let's talk first about your strategy and your business plan and any other questions that may have come up since the last time we met. So, David, you're in my top left screen. Why don't you start us off here and tell us how you did, and if there's any questions we can talk about.
Absolutely. So I have not written out a full business plan, but what I have been working on is trying to kind of outline based on some of the things we talked about last week with some of our strategy points of, what are my requirements? What are the skills? What do I have to bring to the table? That kind of stuff. And so what's my strategy from that? And, for me, ultimately my requirements or what I'd like to do from a financial standpoint is, I've got my law practice right now, which pays my bills, but ultimately I want to transition phase less law practice and more into real estate. And so I'd like to get cash flow today while also building up long-term wealth and net worth over the time. So I'd like to get some cash flow now and balance that out. I don't need to have all the cash flow on the front end, but I'd like to do that just from a personal standpoint, because I'd like to transition to less law and more real estate. So that's kind of on a personal nature, one of the factors that comes into play for me as far as what I'm looking at. But, you had talked about, kind of what do you have? Do you have, what resources do you have? Do you have money? Do you have skills, or do you have time? And, for me, the skills is something I've got as far as some skills, because I've been doing commercial real estate deals for 15 years and done $100 million deals and $25,000 deals from a legal perspective, whether it's syndicating deals or, real estate development, buying and selling, all that kind of stuff for other people. And so I've got that skill set of negotiating deals and understanding all the key points. And as far as the capital side, I've got access to capital, even though I don't have a ton of capital on my own to invest hundreds of thousands into, a multifamily deal. So trying to access the capital that I have with the relationships and then the skill set are really the two big things that I bring to the table. One of the things I don't have a lot of is time, because law practice is very demanding. I've got 5 kids and I'm trying to make sure I spend a lot of time with my family. I don't want to sacrifice that. And so that's one of the things that I'm really struggling with is I just don't have a ton of time to put a deal together or to underwrite a deal and those types of things. And that's also a skill set I need to be developing. So those are some of the things as far as my requirements. I'd love to get some cash flow with long-term wealth building, and then the skills that I'm bringing to the table. And so Lane, you and I had talked about at one point, my opening sentence of my business plan is going to be, I partner with, because I need other people around me that can have the time and a lot of skill sets that balance the skills that I have. And so I'm not looking to go cowboy do things on my own. I'm looking to partner with people. And so that's kind of where I'm at as far as building out a business plan and mindset and outline for it.
Well, it sounds like you certainly put a lot of thought into it and kind of have your framework defined on what you can do and then what else you need help doing. So talk a little bit more, and this would be helpful for everybody else, because I think we're all in this condition, is what is your time frame, David, or everybody for that matter, on when you want to transition from your active employment and your active income to your passive income, and what dollar amounts do you need? Are you thinking of, hey, I need $5,000 a month. I need, that would suffice to what I'm thinking, or do I need 1,000? Because those numbers that you put to that, and then also the time frame that you establish is going to be critical to developing your strategy. Because if you want to do that in 10 years from now, well, you can, you only need this many properties per year or whatever, but if you needed it to do much quicker. So what about your time frame? And other guys as well, chime in here. If you haven't accelerated, I need to do this in 3 years, or I need to do it in 30 years.
Mm-hmm. Well, as far as my desire would be to do it within the next 5 years, to get to where at least 50 to 75% of my income is passive. And if I could get to that point, and I would say at least, so for me to be comfortable doing well, whatnot, 10,000 a month would be great. And so if I could get 5,000 to 7,500 a month in passive income over the next 5 years, I think that's a realistic goal that I could achieve within that time frame. And I'd love to do it quicker, but over the next 5 years would be a good phase to do it.
I'll chime in also. So my goal was 3,600 a month and have that accomplished in 2 years. And then on year 10, I'd like to have 75. So 7,500 in passive.
7,500 a year?
No, per month. Yes, per month.
So 75 a month in 10 years' time.
Yep.
And you said 36 a month in 2 years' time?
Yes.
Okay. That's a very important thing to define, because now, Eric and David, the same thing is you're going to be able to now say how big of a property, how many properties, or what kind of properties am I going to need to target. So having defined that, that's a real key element. Okay, appreciate it. Mark, what about you? What is your goals on amount of income, your skill set, time frame?
You say Mike?
Yeah.
Oh, okay. Sorry, I just jumped on. Sorry about that. So mine is a little bit ambitious, but achievable, I think, because I do have some investments already that I've been investing for about 15 years now. So, but my goal is 20,000 a month, and I want to achieve that in the next 2.5 years by the end of 2021.
Okay. And that's, you've also got a professional medical career.
Yes. Yeah. Now I want to replace my income in corporate with from my corporate job. I mean, it'll be a step back, but I think because a lot of it will be tax-free income at that point due to the tax benefits of real estate, that it'll actually be equal to, or maybe a step, at least equal to anyway, where I'm at now. But replace that income in 2.5 years with real estate income, not necessarily passive income, because I look to be doing real estate investment full time, asset management, and also pursuing other deals and continuing to push that.
Okay, excellent, Mike. Appreciate it. Mark, what about yours? What's your time frame, dollar amount that you'll need?
Yeah, I had difficulty forming all this because there's such a huge dynamic going on with personal and business finances. So lack of information is hindering me, I think. But I put down 5 years and 5,000 a month, light commercial.
Okay, so 5 years and 5,000. And would you be supplementing that with some other active income, or would this be a complete
separate?
Okay.
Yep.
Okay. Kurt, what do you got?
Maybe put it down like 10 years, 10K a month as far as, and that would be, I'd still plan on doing my business at that point in time. So it's just kind of another income stream that I can do whatever I want to with it, as far as whether I want to give it away or, buy some stuff, whatever. So it's just kind of the third leg. And again, I talked to Lane, I talked a little bit offline. I like the idea of having 3 income streams as far as a real estate income stream, a business income stream, and an investment portfolio income stream. That way I've got protected three ways. If the stock market goes down, I've got two. If stock market real estate goes down, I've still got my job. So that's kind of what I'm looking at. This is a third leg as far as between business, real estate, and investments.
So I heard you say 10 years, 10,000 a month.
Yep.
Okay, good. And Doug, what about yours?
My goal is 10 years and $20,000 a month. If we're picking numbers to shoot for, that's what I'd like to do so I can replace my income.
Okay. And from that point, completely go passive income or go real estate investing?
Correct.
Okay. I think all those things you guys mentioned are all, oh, Steve, I'm sorry. I didn't see your photograph's not there. But what is yours, Steve? You with us, Steve? I got you on mute there.
Can you hear me now?
I can hear you now, yeah.
All right, so I'm driving, so I didn't want to be distracted with the video. I'm looking at a real shortened time frame because I'm in my 60s, but I've got a child at home that's going to go to college. So I'm looking at.
I think I dropped you there. I heard looking after that. I dropped you, Steve.
Did you get that?
I heard you say looking, and then I heard you say, did you get that? Between that, I lost everything else.
Okay, I'm sorry. So I said 6,000 to 7,000 a month in the next 3 years.
Okay. Well, I think all of those numbers that you guys said are all certainly achievable, and they're really, I would say, easily achievable. All those numbers, the real estate potential for income and supplementing your income. I didn't hear anything that was expected or that was like, wow, that's going to be really hard to do. All of those numbers are certainly achievable. Okay, good. Well, I want to continue to try to make you really think and really iron out your strategy, your time frame, and your limitations, so that you can be very clear about the next step, which is going to be, I mentioned last week, those funneling ideas or funneling decisions. And that is going to be now defining the market, developing your team, and then identifying the property. But before you can do that real clearly and really zero in with that focus that you'll need to be successful, you have to make sure that you're in the right strategy, and the strategy is the financial returns and requirements and other things. Okay. So even though we're going to put our strategy aside and talk a little bit more about marketing right now, or the markets, I still want you to think about, in the days prior to our next meeting and our meetup at ISI, is just really ironing out your strategy well, so that you can communicate it to me in 1 or 2 sentences, or you can communicate it to another investor or a partner or a contractor. Does that make sense to you guys? Any questions on that, or any comments on what I'm asking you to do, or a question that you have about your own strategy or my strategy? Anyone?
I'll take a crack at this. All right, so I've had an opportunity to chat with my wife fairly extensively. She's got the desire to downsize the house that we're in, use the proceeds to buy the next house, as well as potentially, since we'd be downsizing, then buy, whether it's a fixer-upper, a rental, etc. She's more leaning towards the fixer-upper, and I'm thinking, okay, that's going to require a lot more legwork on my part. So I discussed with her. I said, A, we have to find strategies and buy right, because if we don't buy at a good price, it doesn't matter, and we have to be able to buy low enough so that we have the ability to make the improvements in the property. And I'm not planning on doing a lot of it with manual labor here. So we'll have to buy extremely right in order to be able to afford to send in contractors to do the work. And I gently tried to show her, you're probably not going to find those by just searching Zillow. Yeah, you might, but with most of the properties being at market value, then you're going to probably end up trying to stumble across something that somebody's heard about or somebody else has heard about. And so it's going to have to take something out of her comfort zone. This is going to be new to her, so it's going to require a little bit of outside the box thinking for her too, which she's not used to.
Yeah.
So my goal is, one of my initial thoughts was, I'm not really interested. I don't have the financial wherewithal to jump into something where we have a huge multifamily dwelling that has the diversity that if one occupant or one unit is unoccupied, that I can still keep the ship afloat. So at most, I'm probably buying an older fourplex, or maybe I'm buying a single family dwelling that's a higher end value home to rent out to, because we have a lot of hospitals in our region where we have traveling doctors come through, and maybe market to that. I have a friend that talked about potentially using some of the funds to finance people that can't get standard financing, and then have that be at an additional, at a premium interest rate. I have to talk more about that, and I want to talk more about that with him at a later date. But initially, in my mind here, the way that this is going is we buy a fixer-upper. We either decide to keep that or flip that, depending on the type of property that it is. If we flip it, then we just sell it outright. If we keep it, then it's going to be a rental property, but it's got to be the right rental property.
Okay, Doug, so I heard you mention there you're going to potentially look at a fixer-upper, like a quick flip, that would maybe propel you with more capital, where you could go into a more larger scale multifamily project. Is that kind of what I heard?
Correct.
Okay. Well, both of those are good things. And this is what I want you guys to hear real clearly, is you don't necessarily need a whole lot of money to get into multifamily projects. But just like I was mentioning to David last week when we talked, is your business strategy may be to partner with someone to buy multifamily. Because when you're getting into multifamily, Doug, and everyone, if you're buying something larger than a duplex, you probably don't have enough money by yourself to buy it. A fourplex maybe, but you get over that and you're talking about $1 million asset. And you're going to have to, have money to get a loan, or the bank's going to look at you for a commercial loan, and they're going to say, hey, you don't have enough net worth to buy and hold a $3 million project. And a $3 million project is maybe an eightplex. I mean, it's a very small project. So, Doug, if you want to get $20,000 a month in 10 years, you may want to now start. Your business plan would be, I want to partner with other like-minded investors for multifamily acquisition. Okay, you got one right to your right there, Mike Van. He's one. Mike, how many partners do you have? I mean, how many partners on your last deal? You just closed a deal in Tulsa, or outside of Tulsa.
Right. We had 4 partners on that deal, and we're closing a deal in Dallas, 348 units at the end of this month. There's 6 of us on that general partnership.
So you can see that you can't get to these multifamily projects by yourself. You have to partner with somebody else. And even though you, Doug, said, I don't have enough money, Lane doesn't have enough money, Kurt doesn't, Eric doesn't, David doesn't, Mark doesn't, Steve doesn't, but together we do, right? So if we can get that strategy correct, like Doug's strategy is, I'm going to look in this one market area for distressed multifamily projects. I'm going to hire a contractor to repair them, and then I'm going to rent them to a working class demographic. That strategy, well executed, you can get partners that will join with you that will solve the first problem. Okay. Now, why do I say that is because you mentioned first, and again, this is, you have to have a little seed money, maybe a flip or quick flip or startup, but those things can become disasters quickly unless you're really good at it And if you're really good at it, just stay with that as your strategy. My strategy is flipping single family residence for a quick cash. And I do that 10 times a year. And you could get to 20,000 a month. But to dabble in one strategy for a trampoline to the next strategy, which is, just go right to that strategy. And then let's solve the problems that are keeping you from being successful multifamily, which is I don't have capital, or I don't have education, I don't have training. We can solve those hurdles. Those are solvable problems. But to dabble a little bit in every strategy is the recipe for disaster. Master one and then just master it. Find out what hurdles it takes to do, and then I can tell you what I've overcome. Mike, David, all of us can do that. Eric's got experience in these areas, and that's how we can help you overcome that. So that would be my comments on how to get startup capital, how to get seed money.
Right. And maybe some background information that would potentially help. The only reason why I was looking at the flip itself is, like you were saying, as a little bit of seed money. And although that I've lived in the 5 houses that I've flipped before, not interested in going through and living through the flip. But when we purchased a flip on the outside, and had to put, it was a mold house, did a professional remediation, et cetera, bought it so right that I knew that we were going to be able to make money. Now, did I make as much money as I expected? No. I think I made 30 grand on it. I was hoping to make 50. I'll still take 30. But totally understand the concept, and the challenge that I've got in the flip business is there's about 50, probably 150 guys around the area that are actively looking for those. And B, I don't want a perpetual project. I'm looking at how can I increase my wealth? How can I invest in with others? How can I do something that I can be a little bit more hands-off, do what I do best, a day in and day out basis, let my money work for me, and then try to, and then let's say after a while I've got enough where I can invest on my own, then maybe I end up taking care of a few properties myself.
Right.
But I'm all about what you're saying.
Okay, so Doug, the last minute and a half of what you were mentioning there in your narrative, where you said, I'm going to do this, that's what I want to hear your strategy. And not just to Doug, but everybody. You have to have a real clearly defined, what am I going to do? What do I want to do? How do I want to prioritize my time, instead of just shotgunning different opportunities that are in front of you, because that, it takes a lot of time, and it takes a lot of effort to get good at any one strategy. Okay, so before we close that, this is a very, very critical point, okay? And I just want to continue to challenge each of you to really refine exactly what that strategy is. And the strategy starts from, what do I need? What are my financial needs, and when do I need them? And we've identified that this is how much money I want. This is the time frame that I need it in. And then this is the desires to go either completely passive, or I'm going to be an active manager of that. Because if you can define those 3 things, then I can start pointing out the right niche for you to get into. Hey, it sounds like for you, Doug, you don't want to flip houses constantly, because that's a job. You're going to the job site every day. You want to be more of a passive investor, where you got your money working hard for you, and maybe it doesn't take as much management or day-to-day oversight. David, you said the same thing. Eric, you're probably more of an active investor from what I sound like. Kurt, maybe just more of a passive investor. Okay, as opposed to, I'm not going to be out there hiring and firing contractors. Okay, but some of us may, and I know Mike, that's what his deal is. That's kind of what my deal is too. So we could go around the room and say that, but do you understand what I'm talking about, of why it's so important to clearly narrate in your own mind, or in your family's mind, or your wife's, spouse's, whatever, why you need and when you need that money? Okay, good. So continue to work on your strategy. All right. We got about 25 more minutes. I'd like to talk about the market and how to identify a market. But before I do, I just wanted to ask, is there any other questions about strategy or business modeling? Anyone? Okay. So last week, let's talk about how to evaluate a market and why that's so important. Doug, I think you're.
Hey, Lane, I got one question.
Okay.
Just to kind of give us a mind frame, and if this is too personal, feel free to just not answer, but of the group, or maybe of the people that we're working with, or how many of us are making $10,000 to $20,000 a month passively right now?
Okay, so let me see if I understand your question. How many on this call, or how many real estate investors that I know are making 10 to 20,000?
Both.
Nobody on this call is making that much, probably, but is that a reasonable goal? And do I know many people that are doing that? That is a very reasonable goal, but that is not. You're in the professional class if you're making that type of income. Either you have a huge nest egg, a golden nest egg that you've got invested in one project, or you are a very good investor. My monthly income right now from real estate is about $4,000 a month. And a lot of those are geared more toward value add strategies as opposed to cash flowing strategies. So even though I'm not making a huge cash flow that can supplement my passive income, my net worth is growing quickly through value add potential.
And tell me what the value add means.
Okay, so let me back up and say about 5 or 6 years ago when I was a baby rabbit, okay, I said, hey, look, Lane's got a good Air Force job, okay? I don't need month income because I make adequate amount of money. But what I would like to do is I would like to take my investments and I would like to multiply them quickly. So I want to take my money, my capital, and I want to multiply it. I don't need really monthly income. So what I did was I looked for distressed multifamily projects and I invested in those, knowing that the monthly cash flow would be put back into the project to make it more valuable. And so let me give you my situation, okay? About 15 years ago when I started investing in real estate, I started with $14,000. That was my very first house, and I didn't have someone pushing me to multifamily. And then right now, my net assets in real estate is about $3 million. So that was what it took me. I don't make cash flow, 10% cash flow on $3 million, because a lot of those are tied up in equity in the projects. And we're going to be selling, capturing that equity and repositioning, like I mentioned last week, efficiently placing capital in cash producing assets. So I'm taking that capital out of one asset and placing it in another.
Hey, Lane, don't want to get too personal here. You talk about $3 million. Is that $3 million of equity or $3 million of assets?
That's $3 million of equity. So the holdings that I have, you rarely hold a multifamily as a single member.
Right.
So I've got 10 or 15 members. The asset's worth 15 million and I own 12% of it. So my equity portion of it in all of my holdings equates to probably just a little bit less than 3 million.
But that's the asset value of those projects. That's not the net value. That's what, if it's $3 million and those your portion, there'd also be some mortgages on those as well, right?
The equity that I have is $3 million. The total value is different than that. Okay. That was kind of a long-winded answer. I don't know if I answered your question there, Doug. Did I answer that correctly? Okay. Okay, so there's 4 things that we talked about last week. Strategy, I've beaten that horse and I'm gonna beat it some more, okay? The next thing is identifying the market. 3, establishing your team. And the 4th, identifying the property, okay? And those things go in about that order. Okay, so that's why this week we're gonna talk about market, then we'll talk about team, we'll talk about project last, okay? So market is probably the most important part of identifying real estate. You've heard that term so many times. Real estate is all about location, location, location. Okay. So Eric, I know you got a couple of single families or you got some short-term rentals. What are you looking for market analysis? What are the things in the components and statistics you look for?
Yeah. So right now I'm torn. Last week I said I wanted multifamily. So the past experience that I have is single family, and then I have short-term rental. Moving forward, right now what I'm torn between is either short-term rental or industrial commercial. So I would like to have market analysts on both of those. That way I can help clarify which one I think will help solve my needs.
Okay, so let's talk about short-term rentals first, because that will probably be a little easier to identify the market. When you're talking about that, what are some of the things that you feel like are critical to attracting short-term renters?
I think location is key. I think to and from the property, obviously it has to be nice. I personally stayed in some areas that were lower income areas, and then I personally won't use those properties anymore. So I'd like them to be in a little better neighborhoods as far as cleanliness goes. And then, of course, the team-wise, as far as managing it, is that what you're talking about, or just the actual property?
Let's just talk about market right now. We'll skip team for another day.
Okay, so as far as that goes, anywhere from 1,400 to 2,100 square foot is what I'm looking for. So I'm not looking to host big parties or anything like that. It's just kind of smaller family vacations.
Okay. So some of the things, this is when you talk about market analysis, this is where you just got to have the data. Okay. And when I say data, you've got to look at the statistics that drive a market. The things that drive real estate, jobs. Okay. Where they're producing jobs, they're going to need what? Workers. Where they have workers, what are they going to live? Houses or multifamily. All right. So one of the very first things I look at when I look at a market are what is the economic drivers of that particular area. Okay. So if you're going to buy in a neighborhood, you're going to buy in an area, you're going to buy in a community, you're going to buy in a home, you have to understand the larger economic drivers of that area. Okay. Like, for example, in the North Texas area, we have multiple industries that provide a lot of jobs. But in other outlying areas, especially in smaller markets, the economic driver is limited to maybe one or two or three major businesses, okay, or major industries like the medical field, education field, travel field. And when you start getting into areas like Mike just bought a place in Oklahoma, a multifamily, and he's, and I know he bought it in a smaller market, and that market, is not as diverse as a larger metropolitan area. Okay, so what I said there was, when you go into an area to try to buy a home, multifamily, commercial, you got to look at the economic drivers and you got to look at the job growth. Okay, everybody understand that? Obviously, in an area you're going to see that, but as an example of that, a market that is in one of the areas where the jobs are flowing out, like California right now, that's a very difficult market because the jobs are leaving because of the business policies. And then in addition to that, they're leaving because of the taxation rates. All right. So those things are driving people out of California. And I wouldn't want to be interested in that because I feel like the market's going down because of those two numbers. Okay. So where do you get that information? All right. Mark, where do you think you'd find it, or where could you find it?
Are you asking me?
Mm-hmm.
I don't know.
Anybody got any ideas? Anybody has used any of the other products that are on the market? Right. So you can look at census data. You can look at Bureau of, the government publishes everything on how the demographics are moving, your state, and the population changes. Population changes, job growth is where I would try to look in. Okay. So that's kind of the big picture.
Bureau of Labor Statistics.
Yeah. Zero.
I was going to say Bureau of Labor Statistics.
Bureau of Labor Statistics is what Mike said. And you can look at that right now, and it'll give you a very clear picture of what the demographics are for any one area. And there's 100 other websites that show what the expected population is and what the expected growth rate is. If you're going to try to buy a place because you found a good opportunity across the street from you, and you look at a market study of that, or you look at the Bureau of Labor Statistics, and there's a lot of people leaving that area, that's probably not a good market to hold that project over a long period of time for a rental opportunity, because people are leaving. So what's going to happen to the supply and demand curve of the number of people moving in versus the number of housing? It's going to become out of balance as people move out. Okay. So when you study a market, it's very important to really data mine jobs and demographics. Okay. And if you can find where there's jobs and people are moving in, then you're going to find a good market. Okay. That's big picture market analysis. Mike, go ahead.
I was just going to say that I would have never invested in the small little town that I did for this multifamily project that we bought had I not had insight into they're looking to add 20% of the town's population in jobs over the next 3 years through some pretty recession-proof industries, Google being the main one of them. And there is already a shortage of housing that's driving demand. People are driving from Tulsa, 45 minutes away, to work every day. They're commuting. Everything within a 20-mile radius is almost 100% occupancy. So I saw potential there in this tiny market to do some big things.
So what Mike said,
based on the information he was talking about.
Yeah, what Mike said there was he used he probably used the Chamber of Commerce for that particular area and looked at, hey, what are the incoming employers for this area? Okay, because the Chamber of Commerce is going to know, they're going to know a year in advance. Okay, the beauty of real estate is it's a very slow moving train, and businesses make decisions and it takes them 6 to 18 to 24 months before they execute them. But they make the decision in the city council from this Chamber of Commerce. So if you're going to buy in an area, it makes sense to go to their Chamber of Commerce and say, what is the employment opportunities or what are the employers that are moving into this area? Okay. And as a bigger picture, the Bureau of Labor Statistics and occupancy level as well. Okay. Thank you for that input there, Mike. Okay, so let's dial it down a little bit more. All right, so now we found an area that you like, okay, and now in certain markets, like in the Dallas-Fort Worth market or the Fort Worth market, there's good neighborhoods and there's bad neighborhoods. There's good subdivisions where you would want to invest, and then there's ones where you don't really want to invest. Okay, so now we've gone from market to sub-market, because right next to each other, there may be a really good sub-market that's desirable, located, abutted by a bad submarket. And if you buy a house or multifamily in that area, it's going to be a significant difference in what you can do to make money. Okay. So Kurt, what are some of the ideas and what are some of the things from your observation that you've driven in your town or another town and you said, hey, that looks to me like a good place that I would want to live, or I could live?
It's just how many businesses are coming in, what the vibrancy of it is, kind of how alive it is, the school districts, as far as the reputation of the school districts. Every time we've moved, we've always looked for where the school districts are solid, as far as wherever the school districts are solid. People don't want to go to places where their kids are put at risk. So if the school district's good, there's no good place to move into, as far as that's one of the big things that we always watch.
David, what about you? What are some of the things that you got, 15 kids? You know about school districts, obviously.
Yes, definitely. Well, I'll tell you one thing that I've seen. I've actually talked with some clients who are buying a lot of single family homes and that kind of stuff, and they're wanting to buy. And I have one client who inherited a lot of money, and they were wanting to buy a whole lot of single family homes in this one particular area. It's a high end area just north of Jackson, and they bought a few houses there, and they were wanting to do Airbnbs. One was right on the lake in this really nice area, you know, a desirable area. And ultimately, they got shut down from doing Airbnbs because of local ordinances and covenants and those types of things. So even though it was very much a desirable area to be for an Airbnb type market, you got to know what will that municipality, neighborhood, those types of things allow you to do. You know, it's also an area that is prime for multifamily, but that city, high-end multifamily, but that particular community will not let you do it. So if you know that market, the city just south of them is fantastic for that. So you know, schools are definitely a big area. And you know, I was looking at a project down in Hattiesburg, Mississippi, which is a great college town, and it was there was a multifamily project that was right on the edge of a school district that it was not in the greatest neighborhood or area, but it was a great opportunity because they were right within, even though they weren't a great high dollar property, they were right within a schools district that they wanted. That was a desirable school district. So a lot of people in this particular area were trying to just get into that property because, I mean, they were literally the street that allowed them to be in the higher school district. So school districts are a major player that I've seen, whether it's me personally buying a house or, yeah, but knowing that particular community and those types of things is a big factor.
Okay, so you guys have, I think, all hit it on the right things. So let me kind of recap here on what I think are really important marketing evaluation tools. And you can do this right now, okay? Is one, businesses. Okay, Kurt said that. He goes into an area and he looks at the vibrancy of the businesses, the feel, the atmosphere. How do I do that? Is I drive around kind of in concentric circles, the property that I'm looking for, or just the market that I'm looking in. And you look at the anchor stores, okay? The anchor stores are things like Kroger, H-E-B. These are grocery stores in my area. They may be different in your areas, but they're the upper end grocery stores, okay? You may look at Starbucks. You may look at McDonald's. What's the quality of these anchor stores and what's the age of them? Okay, if you're going in there and you're seeing a bunch of pawn shops, liquor stores, and title company businesses, that's the demographic that lives in that area. You can make money in all economic levels, but if you're thinking about, hey, my strategy is to pitch to this really high-end multifamily project or residential single family, and you're driving around there and you're seeing a bunch of pawn shops and you're seeing a bunch of used auto car places, things that demographic doesn't match. Do you understand the business? So when I look around, I look at the anchor stores, Dollar Generals, what's the demographic that shops in this area? Because that's the demographic that's going to rent from you in that area. And you can be all over the scale. You can be low income housing, perfect, okay? But if low income housing is situated right next to a very high end grocery store, that's a dichotomy. If you're looking for high income areas and you've got a bunch of pawn shops around there, that's a dichotomy that's not going to work, probably, unless there's some change to that. So that's how to evaluate businesses, okay? In addition to that, going to the Chamber of Commerce, like Mike did, and he said, hey, what's coming in here? Google's coming in here. Okay, that would be where I may take a gamble and I may buy I may buy in one of those fringe areas, right? Because I know that Google's coming in, I'm in front of the wave. And even though this is a low income area, by the quality of anchor stores that are around here, I'm gonna buy here because I know Google's coming in, Google's gonna change it. Okay, so that's businesses. That's one of the ways. There's a lot of other ways, but that's one of the ways that you can help identify a market by business. The other thing is school. Mark, go ahead.
No, I want to overstep. I have another one that we used when we bought our first house, but What we did, we didn't buy our first house until right after the bubble, and we're not doing residential now. But you know, if we were to do residential, I'd lather, rinse, repeat. We looked up all the tax records of all the homes we were looking at, and we pulled it up over time so you could see how much they value, or at least the county valued that property. And then we overlaid that with certain indicators like crime maps, and then made judgment calls based on that. And has paid huge dividends, at least on our house.
When you talk about the market, you really have to do some data mining. And whether it's just direct observation or whether it's through statistical research through the Bureau of Labor Statistics or crime studies like that. So you're right in line, Mark, with evaluating these things. But you can just open your eyes and drive around and see the new construction. Okay, so we talked about business. We talked about schools and evaluating those.
Lane,
okay.
Our local police department will, if you call and ask about a specific property that you're looking at buying that is a rental property, they will give you the police reports or tell you how often that facility is involved in police crime.
Absolutely. Another one that I've got circled is crime. Okay, so you obviously, nobody wants to live in a high crime area. And so you can do that with what Doug said through police reports, or you can also do it online. There's certain free surveys where you can do it online. I talked about anchor stores, okay, and how to identify the quality of anchor stores in a market. Mark talked about tax records and looking at the sale price and how that's changed. And then the last thing that we talked about is the convenience, okay? I think Eric said, hey, can you get to and from the property easy? We have a property in East Texas that's in a third market, and it's an area that's a lot of people didn't think it would be a good investment, but it's well positioned along a highway, but it's off the highway enough so that it is not, it's not, you don't feel like you're living on the highway, but it's very convenient. So the conveniency, especially if you're talking about multifamily, is critical. And if you're talking about, I know Eric said he may look at industrial commercial, and then Mark's talking about office space. The convenience of that, if you're a block or two off of a major thoroughfare, you might as well be a million miles away, okay? But if it's a single family, a block or two off may be exactly where you want to be. Okay, so the convenience of where you are, okay, is another important factor. All right, so all of these things we talked about this afternoon in how to identify a market is essential to this next thing that I'm going to say, okay, is you have to identify the market for the type of client that you are trying to attract. Okay, if you're trying to attract low-income housing, okay, then you've got to identify what type of person that would be, where are they going to live, where are they going to shop, where are they going to send their kids to. If you're trying to identify that high-income millennial, okay, that's a totally different market, and that you need to be prospering or prospecting in. All right, so not only is market important, but also the type of client that you're trying to attract. To go back to what? Your business strategy, okay? I'm trying to develop high quality, multi-family, luxury apartments that will meet the needs of this high income millennial working in these areas, in this marketplace, okay? So it's very important when you're evaluating market that you understand the product that you're looking for, and you understand the customer or the tenants or the short-term rentals, whatever it may be, that would want to do that. And that's in alignment with your strategy. Kurt, what do you think about that? You got a frown on your eyebrows are frowned up.
I'm listening to you, Lane. I'm also running through the opportunity zone finances of the one project you're looking at. So the whole time I'm listening to you, I'm crunching numbers on your one opportunity zone. So I'm just looking at numbers on that. So that's where I'm not supposed to be multitasking, but I'm on the real estate stuff. I'm just looking at one of the deals that you have his information on.
So that's that's a real short synopsis on market. If you have a project right now, before you decide on, hey, it's a 3-bedroom, a 2-bedroom, or it's got a attached garage, detached garage, or if it's an office space, Mark, or industrial area, Eric, you've got to understand, who are you actually going to rent this to, or sell it to, or flip it to? What are they going to look like? Okay, and with that person, do they live in this submarket? Do they travel to this submarket? Do they find employment in this submarket? Okay, and then what's happening in that major market? Are people moving in? Is it just stable, or are people moving out? Okay, and then what is the job basis? What is the economic drivers? Is it based on one provider that provides the entire economic foundation, or is it multiple economic drivers that, it's a very diverse economy? And all of those things help you zero in on the marketplace, okay? So before you guys start looking at a property, okay, I want you to think about the importance of what we talked about today with evaluating the market, how to do that, okay, where to find the information to do it, and then what does that information point to for long-term success if that is your strategy. If your strategy is to flip it in 6 months, then long-term viability may not be, the utmost priority, maybe something else, okay? You guys have any specific market questions or information? Anything? All right, that's kind of the underlying foundation. This is in market study, and the next property analysis, we'll go into some more specifics on where you can find this information and where you can data pull from. Okay, you guys got anything else for me today? If you do, call me. I talked to almost everybody on the call this last week, and we talked specifically about, how to do this and how to do that, or maybe I'm no expert in every area, but I have a little bit of experience in it. So if y'all want to reach out, by all means, give me a call or email me, and I'll be glad to do the best I can to answer you or put you in contact with somebody else.
Lane, let me ask a question. How much do you weigh, or do you look at property movement as far as how many properties are for sale in that area? With single family, you can just drive a neighborhood and see how much is for sale. Sometimes that's good, sometimes it's bad.
Yeah.
But in the multifamily market, I mean, if a lot of properties for sale, does that play into your analysis at all for that market?
Not necessarily, because properties trade all the time, and just because they're trading doesn't necessarily indicate a strong or weak market. What you really need to look at, David, and this is a better way to frame that question, is what is my inventory of available properties and what's my demand? So in single family, that's called days on the market, right? If the property, if they've got, generally I think it's about 6 months of inventory, I think, and I'm not a specialist in this area, a realtor would be better. But if they've got about 120 days of days on the market, that's about a balance between the supply and demand. If it gets less than that, then there's more demand than there's supply. And if it starts getting outside of that, it gets to be more supply than there is demand. And so what you asked about really was not necessarily the frequency of that number, but what is that number? And in single family, it's probably days on the market, okay? In multifamily, it's a little bit more difficult because there's not as many that trade constantly, but just because they're trading frequently is not the signs of a healthy or unhealthy market. It's really that supply. Here's the number of people that Jacksonville, Mississippi expects to have in 2021. We're going to have 30,000 people. Right now, we have 25,000 housing units. That's a possibility right there, that balance. What was it 5 years ago? In the last 5 years, what has happened to the rent growth? Has it leveled off? Has it increased? Has it decreased? Those are all statistics and data that you can get. You may not be knowledgeable on where they can be found, but real estate professionals are. You can talk to Chris, you can talk to Spencer, because these guys are pros. Or Doug, you can talk to a single family guy. Or Eric, you can talk to an industry guy or an industrial guy. And they've got these statistics, but don't guess Just don't go in there and go, I think this is a great area. I've heard people making money in this area. That's a guess. Okay, you might as well put your money in Vegas. Okay, you want a data mine. You want to go to the city. You want to find these statistics like job growth, population changes, economic drivers, school district reports, crime information, anchor stores moving in or moving out, tax rolls, all of that culminates into hey, this is a good market to invest based on my 10-year strategy of long-term hold. Okay, so that's an answer to your question there, David. All right, guys, that's 10 minutes over. I apologize about the Zoom thing again. If you have any questions, please reach out to me. I want to put you in contact with the right person that can help you if I can't help you. Okay, so that you can get this data and that you can work that data into your strategy, and then you continue to work on your strategy. Okay, next week or 2 weeks from now, I guess, or I'll give you an update, is we'll talk a little bit more about this, your strategy, and then we'll also talk about team. All right, guys, I appreciate it. Y'all have a great afternoon.
Thanks, Lane.
Yeah.
Thanks.